house prices in Australia will never be the same again. The economy is slowing. The Reserve Bank is sounding alarms, and yet property prices are still climbing. Most people seem to believe a weak economy should mean lower property prices. But if you've been watching what's happening right now, you will know the opposite is playing out. I've been investing now for 23 years, and over the last 9 years, I've helped more than 500 investors through moments just like this. Each time, the people who waited missed out. And this time, the stakes are even bigger. We're already seeing homes selling hundreds of thousands of dollars above reserve. And if you're not paying attention, the cost of waiting could be far higher than you expect. So today, I'm going to reveal why Australia's property market defies normal economic rules, the government policy that's actively pushing property prices higher right now, and what this means for you if you're deciding whether to invest now or wait. Now, before we dive into the details, let's clear up a major misunderstanding about how the property market actually works in Australia. You see, most people assume that when the economy weakens, okay, prices in property must fall. They see headlines about slow GDP growth, warnings from the RBA, or what's happening overseas, and then they think that, property prices in Australia are about to tumble. Last year, Australia's housing minister openly admitted the government does not want property prices to fall. She said it directly in an interview that the government wants prices to keep rising because too many Australians depend on property wealth. Australia isn't like other countries. We've got a government that actively wants prices to rise. A massive shortage of properties, which is only getting worse. In fact, according to AMP, the accumulated housing shortfall, the green line in this chart, is around 200,000 properties nationwide and possibly 300,000. And Australia also has a track record of prices climbing even in weak economic times. Think back to the pandemic, global shutdown, the deepest recession in decades, and yet house prices surged. In my 23 years of investing and 9 years helping over 500 investors, I've seen this pattern repeat. So please stop thinking that bad economic news automatically equals a housing crisis in this country. In Australia, supply and government policy matters way more than GDP headlines. And if you want to make sure your next property investment sets you up to come out winning, even with the looming economic threat, you can book a free call with us using the link in the description or by scanning the QR code on your screen. We'll help you assess your current situation and make sure you walk away with a clear understanding of your best next move to help you achieve your property investing goals. But for now, let's look at exactly what's happening in the economy right now and why the RBA's next move could change everything. You see, most people hear slowing economy and expect property prices to fall. Macro Business recently reported in September of 2025 that Australia's economic momentum has stalled. The RBA has even said the Australian economy is at risk despite its strength. However, what most people overlooked during the COVID pandemic is that we experienced the worst economic global shutdown in history, with unemployment spiking to over 7%. Yet property prices exploded over 20% and even more than that in some areas. So yes, economic growth has slowed, but unemployment still remains low at 4.2%, which is actually better than the long-term average according to the ABS or the Australian Bureau of Statistics. So don't think a softening economy means disaster for housing. It actually often means the opposite. More government stimulus, often rate cuts, and that then just pushes property prices higher. Now, we also know that the RBA is in the midst of a rate cutting cycle. No, we don't know when the RBA is going to cut rates next, and everyone seems to be debating that. But the fact is we are in the midst of a rate cutting cycle. Yet a lot of people seem to think somehow that economic weakness means that interest rates are going to stay high, or they keep waiting for the next announcement from the RBA before making their next property investment move. But let's have a look at the facts. The US Federal Reserve just cut interest rates in September of 2025, and more rate cuts are expected than originally planned. Now, this gives the RBA massive scope to follow suit. Every time interest rates fall in Australia, property demand increases and prices spike. Post-COVID, for example, when rates dropped to record lows, prices didn't just rise, they exploded over 20%. You see, when the US cuts rates, it gives the RBA permission to follow without worrying about whether the Aussie dollar will be too badly impacted. But lower rates makes borrowing cheaper, which increases buying power, which drives up property prices because you end up with even more buyers in the market. So even with a weaker economy, when unemployment is at 4.2%, that means that employment is at 95.8%. That means that more than 19 out of 20 people still have a job. So they can still borrow when rates drop. Now, many buyers are still just sitting on the sidelines, kind of unsure and waiting for certainty, waiting for when rates drop even lower. But by the time rates reach maybe their lowest point in this cycle, competition will be even fiercer. Prices will be even higher. So if you're waiting for the RBA to announce more rate cuts before acting, you're likely going to miss the best buying window because prices are moving fast. But this isn't just a repeat of what we saw during COVID. The fundamentals are even stronger right now. You see, unemployment is still quite low, yet most people think any economic slowdown automatically means mass unemployment and collapsing demand. Now, unlike the GFC where unemployment hit over 5.8% or COVID where it spiked to 7.4%, the ABS shows we're sitting at just 4.2% unemployment, which is actually below the long-term average. So unlike past downturns, we're not seeing mass job losses, and a healthy jobs market supports buyer confidence and mortgage serviceability. That means people still have an income, they can still afford their loans, and they are still actively looking to buy when opportunities arise. It's a completely different scenario from previous economic downturns. So don't confuse a slower economy with a weak property market. There are still in Australia more buyers than available properties for sale in multiple areas around Australia. And this will keep forcing property prices higher. But then we have something else that has just come into force from the start of this month. The federal government's first home buyer incentives. They come into force from the 1st of October. Now, most people seem to think that government housing assistance will actually make property more affordable for people. That's just not true. The expanded first home buyer guarantee, which like I said, starts on the 1st of October 2025, even the RBA itself has warned it will push property prices higher. They've calculated that it could add between $28,000 to $52,800 to current property prices. Personally, from what I'm seeing in multiple markets around the country, especially markets where first home buyers are very, very active, I think this is very underdone. We're already seeing certain markets where prices were, say, priced around $700,000 at the start of this year. Properties in those markets that are identical to what sold for $700,000 at the start of this year are now selling for nearly $800,000. So yes, that's a rise of $100,000 in just 10 months. And why is this happening? You see, when you give buyers more purchasing power without increasing the number of properties available, without increasing supply, you just push prices up. It's economics 101. These programs from the government, they're not designed to make housing more affordable. They're designed to get more people into the market. And that's actually what the federal government has promised. They've promised that this scheme will get more people into the market. And it's true. But the problem is that means more demand, same limited supply. And that equals higher prices. I spoke earlier about how there's already a shortage of between 200,000 and 300,000 properties in Australia. And now these first home buyer incentives are expected to unleash another 70,000 buyers onto the market in just the first 12 months alone. What do you think that's going to mean for the property market? Even more competition, which will push prices higher. And look, this won't just be at the lower priced first home buyer levels, mind you. As properties in those lower price point levels increase, it will then force prices up in the wider market as well. So in my opinion, the interest rate cuts combined with these first home buyer incentives provide one of those rare opportunities to accelerate your wealth building goals with property so you don't miss out. It's one of the biggest reasons so many of our existing clients have come back to us asking us to help them buy again. They've already seen the results we've helped them get. Most are up at least 100 grand in equity in just their first 12 months since we helped them buy a property. And now they want to use that equity and have us help them buy again. And that's because they've realized something most people haven't. Prices are already booming. Most people seem to think that significant price growth is still coming somewhere in the future. They don't realize it's already happening right now. Realestate.com.au reported that Sydney auctions are smashing reserves by hundreds of thousands of dollars. This is happening right now while others are worried about economic weakness. We've had clients in certain areas see over 15% growth in just the last 12 to 18 months by recognizing these early signals and jumping in instead of waiting. So now isn't the time to be waiting for growth. It's already here. When properties are selling significantly above reserve prices, it signals there's more buyer demand than seller supply. This is the early stage of a price surge. Momentum is feeding on itself. Expectation of rising prices in the property market in this country actually causes prices to rise, and it accelerates from here. So if you're hesitating, you may already be behind the curve. You still have an opportunity though if you act quickly. So stop waiting for the trend to become obvious to everyone else, because by then the best opportunities are gone. You're paying peak prices and you're probably looking back with regret, wishing you'd got the right help and taken action earlier. So if you put this all together, here's what it means for your property investing strategy. First of all, don't be like some people who are still waiting for a property crash that simply is not coming, especially with the government and all the economic factors actually aligning for significant price growth. The RBA is preparing to cut rates as the US leads the way. Government policy and incentives are actively pushing prices up. Unemployment remains low at 4.2%. Supply is still chronically short and getting worse as construction slows. First home buy incentives are bringing extra buyers into the market. Auction results already show explosive demand. So if history repeats, and it usually does, we could easily see another 15 to 20% growth, not everywhere, but in multiple markets around Australia. Now, on $1 million average house price, that's $150,000 to $200,000 in higher prices in just the next 12 months alone. Now, last time this happened, post-COVID, prices rose over 20% in just 1 year. So instead of waiting for the perfect moment, focus on buying the right property in the right location as soon as you can. For many people, buying the right property before Christmas of this year could be one of the best financial decisions you make. But if all of this feels overwhelming to do on your own, that's exactly why we created our passive investor approach. It's designed so you can build a property portfolio without turning property into a second job. You're probably already busy enough. So if you'd like to see how that works, book a free call with us using the link below. We'll walk you through how to identify the right property investment strategy for you, pick the right markets, and secure the right assets step by step. So if you take one thing away, it's this: waiting for the economy to look better actually means you buy later, but at a much higher price. The real edge is acting before the wave hits. And if now's the time to act, where then should you actually buy? Well, that's exactly what I cover in this next video. Click here to watch it now, and I'll show you which areas still have the biggest upside.